Today, we are looking at an important currency market development involving the Vietnamese dong, and more importantly, what this type of exchange rate movement can teach us about the Iraqi dinar and the broader question of currency valuation. The latest information shows that the State Bank of Vietnam has set the central exchange rate for the Vietnamese dong at 25,586 dong per US dollar, while commercial banks such as Vietcombank have been quoting the dollar at approximately 25,950 dong on the buying side and around 26,330 dong on the selling side. At first glance, these numbers may appear to be simply another daily exchange rate update. But for people who closely follow the Iraqi dinar, developments in another managed currency can provide useful insight into how central banks approach exchange rate policy, market stability, foreign exchange supply, and economic adjustment. The first point to understand is that Vietnam operates a managed exchange rate system. The central reference provides an important policy signal, while commercial banks can quote different buying and selling rates depending on market conditions, liquidity, demand for foreign currency, and other financial factors. Therefore, the difference between the official reference rate and commercial bank quotations does not automatically mean that a currency has been revalued or devalued in a dramatic way. This distinction is extremely important when analyzing the Iraqi dinar as well. Currency followers sometimes see different numbers appearing online and immediately interpret the difference as evidence of a major monetary policy change. But an exchange rate can move within a managed framework without representing a fundamental revaluation of the currency. The Vietnamese example demonstrates why investors and viewers should separate three different concepts: an official reference rate, commercial market pricing, and a genuine structural change in currency policy. The State Bank of Vietnam's reference rate of 25,586 VND per US dollar represents the central benchmark established by monetary authorities. Commercial banks then operate around market conditions and their own pricing structures. A buying rate near 25,950 and a selling rate near 26,330 show that customers may encounter rates that are different from the central reference rate. This is a normal feature of foreign exchange markets. Banks need to account for operating costs, liquidity, market risk, customer demand, and the spread between buying and selling currencies. Consequently, the existence of different rates does not by itself indicate that a country has suddenly changed its currency valuation. That lesson is directly relevant to Iraqi dinar followers. The Iraqi dinar is also influenced by monetary policy, foreign exchange management, banking regulations, government finances, oil revenues, international reserves, and the relationship between Iraq's official financial system and the wider foreign exchange market. When people discuss a potential future change in the Iraqi dinar exchange rate, the most important question should not simply be, what number is being discussed online? The more important question is, has the Central Bank of Iraq officially changed its monetary policy, and what economic conditions support that decision? Without an official policy announcement, a new central rate, or a formal monetary decision, claims about a dramatic new Iraqi dinar exchange rate should be treated carefully. This is especially important because Iraq's economy remains heavily connected to oil revenues and US dollar flows. The Central Bank of Iraq must consider price stability, foreign exchange demand, banking sector conditions, government spending, reserves, and the overall health of the financial system when managing the dinar. The Vietnamese situation also highlights another important point. Exchange rate management does not necessarily mean that a central bank is trying to create a sudden appreciation of its currency. Central banks generally have broader objectives, including maintaining economic stability, supporting trade, controlling inflationary pressures, and ensuring that foreign exchange markets function in an orderly way. Vietnam's economy is strongly connected to international trade and manufacturing. Its currency policy, therefore, has to take into account exporters, importers, foreign investment, domestic inflation, and global dollar conditions. Iraq faces a different economic structure, so we should not assume that Vietnam's exchange rate experience will automatically be repeated in Iraq. Iraq is heavily dependent on oil exports, while Vietnam has developed a large manufacturing and export sector. The two currencies therefore operate under very different economic circumstances. However, the comparison remains useful because both examples demonstrate the importance of central bank credibility. For the Iraqi dinar, Long-term currency stability depends not simply on a number printed on a screen, but on confidence in Iraq's financial institutions, banking system, fiscal management, foreign exchange framework, and economic policies. That is why banking sector reforms are particularly important. If Iraqi banks become more integrated with international financial standards, improve compliance procedures, strengthen transparency, and expand digital financial services, the overall financial system can become more efficient and more trusted. For Dinar followers, this is an important area to watch because meaningful monetary changes generally require a strong financial foundation. A currency's value cannot be analyzed independently from the economy that supports it. In the short term, the Vietnamese Dong update is mainly a reminder that currency markets can move within established policy frameworks. The central exchange rate can change gradually, commercial banks can quote different prices, and the market can respond to changing dollar conditions without any extraordinary event taking place. For Iraqi Dinar followers, the short-term implication is therefore one of caution and observation. Instead of focusing on unverified exchange rate figures circulating on social media, viewers should pay attention to official statements from the Central Bank of Iraq, the Iraqi government, international financial institutions, and established banking sources. If an important monetary decision is actually made, it should eventually become visible through official documentation, banking instructions, exchange rate publications, or other verifiable financial channels. The long-term picture is more complicated but also more important. For Iraq, sustainable economic improvement would depend on strengthening public finances, reducing excessive dependence on oil revenue, improving the banking sector, encouraging private sector growth, developing infrastructure, increasing financial inclusion, and maintaining monetary stability. These developments could potentially create a stronger foundation for the Iraqi dinar over time, but that does not mean that a specific future exchange rate can be guaranteed. This distinction matters because currency valuation is influenced by numerous factors. Even when an economy improves significantly, the central bank may choose to maintain a stable exchange rate framework rather than allow a sharp appreciation. The Vietnamese example reinforces that principle. A central bank can manage its currency carefully while allowing market forces, trade conditions, inflation, and global financial developments to influence actual pricing. For Iraq, one of the most important indicators to monitor is the difference between official foreign exchange channels and unofficial market conditions. A narrowing gap can indicate improved confidence and better functioning of the foreign exchange system, while a persistent gap can indicate continuing pressures or distortions. Another important factor is inflation. A stronger currency is not automatically beneficial if it creates other economic problems. Policymakers must balance exchange rate stability with domestic prices, employment, exports, imports, and overall economic growth. That is why professional currency analysis avoids statements suggesting that a revaluation is guaranteed simply because a particular country has announced an economic reform. For the Iraqi dinar, reforms can certainly be meaningful. Improvements in banking regulation, payment systems, anti-money laundering controls, international banking relationships, customs modernization, and fiscal transparency can all contribute to a stronger economic environment. But those reforms should be evaluated based on measurable results rather than expectations of an overnight currency transformation. So, what should Iraqi dinar followers take away from today's Vietnamese dong development? The key lesson is that official exchange rate policy and actual commercial bank pricing can exist side by side. A central reference rate is not necessarily the same as the rate a customer sees at a bank. Likewise, a difference between two rates does not automatically represent a revaluation. The second lesson is that central banks usually move carefully. Exchange rate policy is connected to inflation, economic growth, foreign exchange reserves, trade, financial stability, and government policy. And the third lesson is perhaps the most important. When analyzing the Iraqi dinar, credible information matters more than dramatic numbers. If Iraq eventually makes a major monetary policy adjustment, the strongest evidence will come through official channels. Until then, the responsible approach is to distinguish confirmed developments from speculation. The Vietnamese dong update is therefore useful, not because it predicts a specific future value for the Iraqi dinar, but because it provides another real-world example of how managed currencies function in modern economies. For viewers following the Iraqi dinar, The best strategy is to remain informed, patient, and focused on verified economic indicators. Watch the Central Bank of Iraq, monitor official exchange rate publications, follow banking reforms, observe inflation and foreign exchange conditions, and pay attention to Iraq's fiscal and economic developments. A currency story is always bigger than a single exchange rate number. Behind every rate are monetary policy decisions, economic fundamentals, financial institutions, trade flows, government finances, and public confidence. As we continue monitoring developments in Iraq and international currency markets, remember that responsible analysis means separating confirmed facts from speculation. Today's Vietnamese dong figures do not confirm any particular future Iraqi dinar rate, but they do provide a valuable reminder that exchange rate systems can be managed gradually, and that major currency changes require credible policy decisions and economic foundations. Thank you for watching Iraqi Dinar News. Make sure to subscribe to the channel and like the video for responsible, factual, and carefully analyzed updates on the Iraqi dinar, Iraq's economy, and important developments in global currency markets. As always, stay informed. Verify major claims through official sources, and remember that this content is provided for informational and educational purposes only and is not financial advice.